Earlier this year, mining giant Rio Tinto faced some massive problems. It was grappling with debt of $39 billion in the middle of the global economic crisis, and it was conducting a very public argument with its biggest customer, China. However, recent production figures and other news show that Rio Tinto has turned the corner. To tell us more, we have Morningstar Senior Resources Analyst Mark Taylor. Mark, welcome.
Thanks, Vicki.
Mark, Rio Tinto has just delivered its third quarter production figures. I guess iron ore is the jewel in the crown for Rio Tinto. How did iron ore do?
Exceptionally well, and surprisingly so. I was expecting a slight reduction in production, if anything, and they've come out with a 5% increase in production on the previous quarter to 47.5 million tonnes, and that's just a bumper production figure, and kind of puts pay to any notion that there might be some retribution from the Chinese for Rio rejecting Chinalco's overtures.
So sales to China have held up?
Absolutely, very strong, and the price was at the benchmark price. Somewhat surprising in that both Rio and BHP had forewarned that a considerable portion of their sales might be at the spot price, but when you consider that the spot price was well above benchmark, it's no surprise that they chose the benchmark price.
So it sounds like iron ore sales have done well. What about copper?
Copper, I think, did very well also. It was a slight reduction on the previous quarter, but again, better than we were expecting, so very pleasing result there as well.
Any weak links in the chain, Mark?
Aluminium, again, was the weaker division, and no surprises. I mean, it's the division that's been the source of Rio's woes, the reason why Rio's had such high debt levels and was forced to go to market with a dilutionary equity issue. Production of alumina down about 4%. But nothing too out of the ordinary or unexpected. It's just more disappointment, more of the same, really.
Earlier this year, Rio made a lot of headlines as a result of its $39 billion debt. How are they traveling with that, Mark?
Well, it's come down quite considerably. There's been the $15 billion rights issue, which has been put straight to that purpose. And there's also been ongoing asset sales. And by our reckoning, gearing, net debt to equity, is probably getting down to around about 60%-ish, and with strong cash flow next quarter and more receipts from asset sales, we should be well under 50%, I would think, by the end of the year. So that's quite a respectable debt level.
The problems between Rio Tinto and China have been well publicized, what with Rio's chief iron ore negotiator in China, Stern Hu, languishing in prison. What's the state of play there?
Well, I don't think there's been any major progress made on that front. I don't think there's any more clarity coming out on what the likely outcome of that episode is. But one thing's for sure, the underlying realities that people and countries have to do business is evident in Rio's quarterly result, because it didn't have any effect on iron ore sales to China, that's for sure. I believe that the month of September was a record month for iron ore imports. So there may be some political wrangling and that sort of thing going on, but the underlying reality is business as usual.
On the upside, Rio Tinto has had some very positive developments in Mongolia. Can you tell us more about that?
Well, at long last, Rio and its partner Ivanhoe Mines, Canadian-listed company, who owns the Oyu Tolgoi copper-gold project, have come to an agreement with the Mongolian government. It's been a long time in the making, and it looked pretty shaky for a while when there was a super profits tax instituted in that country, which was borderline nationalisation of mining assets. So there was great concern there for a long time, but common sense seems to have prevailed, and the agreement's now in place, and Rio has announced that it's investing in the next tranche of Ivanhoe shares, which will take its stake to almost 20%, and ultimately it could go to 46% of Ivanhoe. The Mongolian government back in would would give them 34% and Ivanhoe 66%. So it's very good news for Rio. This project could end up being about 5% of their business overall, which is about the right level, we think, because there is sovereign risk there still, but it is a jewel, so it's about the right balance.
In your report for our premium subscribers, you tell us about Rio Tinto's outlook. Is there anything that you can tell us about that here?
Oh, well, I think Rio's just in recovery mode. They've had a shocking period where a major asset purchase has gone sour for them, and it was exacerbated by the market downturn, and they couldn't offload assets to recapitalise. But they seem to have come through that phase, reasonably unscathed, and from here, I think things are looking positive again. I mean, Oyu Tolgoi is an example of that, where there's significant growth. Their iron ore division going exceptionally well. Production will be higher this year than was anticipated. Copper's still going well. There are some weaker spots, but overall, I see operating cash flows growing strongly. Rio's on the mend.
Mark, thank you for joining us today.
Thank you.